Welcome to another weekly stock market update. Hope you're doing great. We're going into a short week. In case I forget to mention that, we have Juneteenth, the holiday in the middle of the week next week. It's just like they keep throwing new holidays at us and we can't make any money in the markets. But I just got off a wonderful call with my mastermind group. I have this group called the Cash Flow Machine Mastermind Group, and I'm a little bit emotional, I have to be honest. It was this really cool call where we were talking about how well everybody was doing. And one of the guys in the group, I won't say his name, he's made $2.5 million since he started with me. So, and then I had another guy that made $130,000 this week, and he's up 35% for the year. And one guy's up 50% for the year. So it makes me really proud to be able to play some small role in some of these people's success. So anyway, I figured I'd wait until all the emotions got out of me. But then again, I'm running out of time, and I want to start my weekend at some point. So I figured I'd get on and just say hello and give you the dog and pony for the week. Anyway, I hope you're having a great week. It's been a tumultuous week in the market for most people, not these guys. Apparently, these guys are just doing great, and I'm really proud of that. And anyway, so we are in a red market. I thought we were going to go yellow, but we couldn't quite turn the corner on yellow last Friday. We ended up closing down at the end of the day, and it was just kind of lousy. And we've got 4 red lights, so be careful out there. Don't be in cash or be deep in the money if you're selling calls, or be hedged somehow. Because these are tough markets right now, and I'll tell you why in just a second. Let's start with the Nasdaq, though. If you're in the Nasdaq, you're not having a lot of trouble because the Nasdaq gapped up this week, doing really well. It's at all-time highs, and that's because Apple's broken out, Nvidia just broke out and split. We have all kinds of good stuff going on in some of the composite and the tech stocks that are out there. So that's why so take a look at that one. That's like, you wouldn't know it's a red market from that, but that's pretty specialized in tech, and tech is doing well. The S&P 500, same thing. That's heavily tech oriented and weighted. That's a weighted index. And so they weigh a lot towards those big ones. But if you look at the Dow Jones Industrial Average, it doesn't look anything like those other 2 charts. In fact, the Dow Jones Industrial Average is below its 50-day moving average. That doesn't look good. That's like a little dreaded H pattern showing up. And when that shows up, we could be heading lower. So we'll see how it does when it goes back to that 38,000 level. It's funny how we just got right to that 40,000 level and said, nah, I think we're going to go back the other way. The New York Stock Exchange Composite Index is bad too. It's below the 50-day moving average. So 2 really great averages and 2 kind of averages, but that's the market. The broad market is the New York for me. To me, this is the one I look at. I'm like, I don't know, this doesn't look awesome, but it doesn't also have a lot of selling volume. So that's kind of a ray of hope for it. And then this is the other ray of hope, is that the volatility on the VIX is not up that much. So we're not that volatile. People aren't panicking. So it's kind of an orderly little sell-off, and that's normal routine stuff. The Dow Jones transports, you can see, are headed lower. There's actually a death cross going on there. And that's not good. When the markets are moving lower because the Dow transports are moving lower, that means people aren't buying as many things. Logistics are slowing down. It's recessionary. So we'll see what that does. The Nasdaq Bank Index is down. You could see that spiked, and then we've had this news overhanging the market that we have 63 banks that are in some real deep trouble because they're not lowering rates, and therefore treasuries are staying low and causing some problems with these banking concerns. So there might be some illiquid bank liquidations on the horizon, and that's why the bank index is below its 50-day moving average. So keep an eye on that. But on the other hand, we've got a computer index that is unbelievable. Like, you can't get out of the way of this thing. It's going to run you over. The computers are doing well. And if you're into computers, SMCI, Nvidia, Apple, any of the techs, you're doing great. So congratulations if you're in that. And some of these trends get in and entrenched, and they stay in and entrenched, and they keep running for a long time. This one's been running since April, and now we're 3 months into it, and it doesn't see an end in sight, with a gap up this week and a gap up last week. So it's pretty amazing. On the other hand, if you're in oil, this is the oil index, it's down to its 200-day moving average. So people are selling off oil. That's recessionary. That coincides with that transport index. So we've got one sector of the economy doing really well, and that's tech. And the other sectors of the economy, manufacturing and moving goods around and oil and things like that are starting to suffer. And we'll see if that's a trend that stays in place. Looks to me like it's already in place. When you look at the gold bugs index, you can see that there's some weakness in the gold down below its 50-day moving average. So the safe money is moving out of the safe money. I don't know if they're moving into treasuries or what they're doing, but some of the money is coming out of gold after a big run up in gold. and some some success if you were able to pick up gold before the big trend breakout. The Saudi petrodollar. This is a little bit of news that you should know if you're not following it. Henry Kissinger, who's the Secretary of State back 50, 60 years ago, 70 years ago now almost, and Richard Nixon, who was the president back then, they decided to go over to Saudi Arabia and make a deal with the sheik over there and said, hey, dude, we're going to be protecting you, but if you want our protection, you're going to need to trade all of your oil in the dollar. They call it the petrodollar. And that was an agreement that stood the test of time for 50 years. And they bought all these F-16s from us and a lot of stuff for their defense industry because we protected them in exchange for them making the world trade on the dollar. Well, that ended this week. And what does that do? Well, the world had to go out and buy treasuries in order to be able to trade on the dollar, trade those treasuries for oil, okay? And the treasuries were basically the safe haven for money. And so people were buying and propping up our treasuries because it was the world's reserve currency, and it was supposedly protected. Well, that's ended now. Saudi Arabia's like, you know what? Maybe Russia could sell us some weapons. Maybe we can make our own weapons. Maybe we can do this. And so they've ended the petrodollar agreement. You're not going to see a big problem with it this week, but that oil index that I just showed you has already showed that news was coming. That oil index is going to show you maybe that trend stays in place. The dollar, the treasury index has been going down for almost 2 years. It's down. If you put your money into treasuries, thinking you were going to make 3 or 4% to safest money in the world, your money's down 50%. Yes, you got your 4% coupon, but you're down 50%. You're in trouble, right? Treasuries are in trouble. And now treasuries may be even more in trouble. That's what that second circle is at the bottom. The bonds could be in trouble. And, there might be other bonds in the world that are better. There's a lot of South American and Central American countries that are doing pretty well right now, and they're not using the dollar. All right, Federal Reserve is the other news. They leave the key interest rate unchanged, and they give us this fake number. So the May Consumer Price Index came in at 0. Hey, it's at 0. Are you paying no more money in inflation than you were a year ago? I'm not. Like, stuff is still going higher. And they exclude food and energy. I guess people don't eat food and don't use energy in the United States. So they exclude food and energy from the Consumer Price Index. And, they quote these stupid numbers. And you and I both know that inflation is a lot higher. Let me tell you why. I don't need to get into it with you, but I just put out a video on a YouTube channel about inflation. And I'm coming up with numbers like 9.1%, depending on how you weight it, and 11.1% over the last 5 years. So over the last 5 years, we've had 11% inflation. What does that mean? That means that even just without not even factoring taxes and inflation and fees on your money, if you're not making at least 11% to beat the inflation rate, you're going backwards. So let's say you go out there and your broker tells you can go ahead and make 6 or 7 or 8% or whatever. Well, if you're not making 11%, you lost 3%, 4%, 5% in buying power, right? After you pay taxes on your gains, you lose even more. So you've got to make more money now. You can't be in there with a 2% inflation, real 2%, because it's not 2% anymore. It's a lot higher. You can't be in there making, 2, 3, 4, 5% thinking that's great. You've got to make a lot higher. That's unfortunate, but that's the reality. And so you've got to start looking for things that are going to make you better rates of return. Let's take a look at some of the widely held stocks out there. First of all, Apple. I don't know if you guys saw it, but on June 6th, I put out a video on YouTube and to my subscribers on my newsletter, by the way. If you haven't subscribed to our Insider Tips newsletter, you can probably click at the bottom of this video. Or if you are watching it right now in Insider Tips, thank you for being a member. But we put out the video, and if you are one of the subscribers, that I put this video up, right? And it said, hey, listen, we got a triple top coming in Apple. It's been building for 2 years. When we get a coiled spring, tendencies are that it's going to break out. And that stock, I said, it's probably going to break out right around $200. Sure enough, 4 days ago, it blew through $200 and went all the way up to 220 in 2 days. So it made 10% increase. I think it's going higher. I don't know that, but my probabilities and my charts are telling me that's where it looks like it's going. So pretty proud of the fact that we alerted people to buying Apple, or at least doing research on Apple before it broke out. And you're starting to see the beginning of a breakout. And we're in a red market, but the techs are outperforming everything else right now. So the relative strength in techs is amazing. Okay, Tesla, Elon Musk got his pay package reinstated. They kind of told the Delaware judge, screw you for making, for invalidating the prior agreement. They put the agreement back in place. I guess there's some I's to dot and T's to cross to get that all finalized. But and they're also moving their charter from Delaware, where they had that adverse ruling, to Texas, where things are a little bit more business friendly, and that's not going to be good for Delaware. So I know I'm talking about a lot more stuff than I usually talk about, but the news is generally good for Tesla. The stock isn't performing lately. When the news is good for Tesla, the stock doesn't do that well. But anyway, that's kind of the deal. There's still some sellers in Tesla that are keeping it down. But I think once they're out, this stock goes higher. And if you listen to this guy, right, who I think is the Edison of our time, if you listen to him, I mean, he said a number, and you can take it with a grain of salt. He said he thinks Tesla is going to be worth 30 trillion. The stock is worth $500 billion now. Okay. He thinks in the next several years, maybe a decade, it's going to be worth 30 trillion. And he says they're inventing these humanoid robots. And I've seen them. They're pretty cool. They're going to do your laundry and cook your meals and maybe mow your lawn. These robots are going to cost 10,000 to make. They'll sell them to you for 20 grand. I'll buy a robot that mows my lawn and does my laundry. Why not? Right? That's one of the things. I'm sure everybody would buy one or two of those things. The cars are going to drive themselves. The insurance is going to bring rates down because these cars are not going to be in accidents as much anymore. There's so many things the guy's doing inside of Tesla, let alone, going up and creating putting the world together with these satellites. He's got 6,000 satellites the guy's put into orbit. Do you realize it's 6,000 satellites? He launches something like twice a week. Like we used to launch things like every 2 years with the space shuttle back in the 80s and 90s. Now this guy launches things a couple of weeks, lands his rocket back on the same, on these platforms. Like it's just crazy what this guy's been able to do. He bores these tunnels underneath Las Vegas, and he runs Teslas through them, and it connects it without traffic. Like there's stuff that we don't even think is possible. We don't even know about that this guy is executing on. So, you got to pay attention to this company. I don't know what's going to happen in the future. I've sure been wrong short term on the stock chart, but I haven't been wrong on the story. So, hopefully that'll all turn around. Usually it does. It's just going to take a little bit more patience. All right, quickly, Microsoft hitting all-time highs. It's, 7 out of 8 of the last days have been up. Amazing, what's going on in Microsoft, all-time high. NVIDIA, it just split 10 for 1, so the numbers are easy. This is a $1,300 stock that's now a $130 stock. So, one guy had 50,000 shares in my mastermind group. Now he's got, or 5,000 shares. Now he's got 50,000 shares. He's like, what am I going to do with 50,000 shares? I'm like, you're going to get richer. And so, I mean, this stock keeps going. Now, there's a couple of gaps on this chart that I'm concerned about. I see a big gap at 96. So be careful. This stock could pull back when the profit taking starts happening. So just be careful. That's all I have to say. Meta, I think, is in a downtrend. It's proving me wrong right now, but it's above its 50-day moving average. That's constructive. It's just not doing it on any kind of good volume. So I would be careful on Meta. To me, that's the one tech stock that's weak. While it's going up, it's not as convincing for me. But I've been talking about Netflix for weeks and weeks, maybe months and months now, and I said I think Netflix is something you can't ignore. And look at it coming up from that $160 level, from a couple years ago, and over the last 2 years, it's done nothing but quadruple, right? Almost quadruple, and it's about to hit that all-time high. What will it do when it gets there? I don't know. It probably will go higher, right? The company is executing. It's doing good things. It's changing the way we watch TV. We binge Netflix. Who would have ever thought you would say that, binge Netflix? JP Morgan Chase is in that banking sector. It's doing fine. It's just pulling back to its 50. Same thing with Bank of America. And I'll do this one. Well, maybe I'll do a couple more. Google is, again, all-time high because of tech and because of its artificial intelligence stuff with its product Gemini and those other things. Alphabet looks like it's unstoppable, especially if the tech bubble continues. And then Kava Group, which is a restaurant chain, is at all-time highs and on a breakout. Another wonderful stock, and I'll leave you with this one. It's Amazon, and again, this one looks like it's up 25% from its breakout. It looks like it's making a little consolidation here and making cause to move higher. If it moves higher, I see 206 in its future. We'll see what happens. As always, this is entertainment and information, and it's not a financial recommendation that you should be following, but it is an idea for you to start doing your research. And I'm putting out a lot of videos lately, and we've been hitting a few of these. Now, it helps that the market's been on a streak, but right now the market's red, and so you have to get ready for the next green market because they're always coming. There's always one around the corner. I suspect we'll see one in the next week or two. We'll see. Anyway, enough from me. Remember, we have a holiday next Wednesday, Juneteenth. Thank you so much for being a part of the weekly market update. And if you're watching this as a subscriber, thank you for subscribing. Have a great weekend, and I'll see you next time. Take care.